Hello everyone, this is Sebastian McMahon from IA Financial Group and I'm back with the weekly economic review for the week ending July 19th, 2024. So lots of things happened south of the border since the last review. I would never in a million years have thought that I will be pronouncing the words assassination attempt referring to something going on with the former president of the United States, but here we are. But I won't dig into the details around this event. I will be looking more at the big picture and focusing even more importantly on what's going on the Democrat side of the aisle. As it is getting more and more expected that we will hear by the end of the weekend that Mr. Biden is dropping out of the race and someone else will fill in. So it's not confirmed yet, but this is what's being top of mind right now in the political landscape in the US. Also, next week we will have the Bank of Canada rate decision. We are fully expecting a rate cut next week. That would be the second consecutive rate cut of this cycle here. Remember that on June 5th, we had the first cut in 4 years in the country. We had expected it, and when it came out, we said that we would expect a second consecutive rate cut on July 24th. We're still of that view, and markets also have rallied to that view. We still think there's going to be 3 to 4 cuts by the end of the year. It is also fully priced in. So good news coming here for Canadian borrowers. But before we go into the details, let's look at the markets this week at a close on Thursday. So maybe focusing on the right side of the table, so the year to date where we stand now. Canadian dollars, we have over 20% return in the US when we bring everything back in Canadian dollars. That's a very strong return after 6 months and a few weeks. The TSX is lagging at only 10%, but still that's a very nice vintage in 2024 here for returns on the stock market. There could be or should be some volatility in the second half of the year as we move closer to the election. There are winners, but there are losers also. If Trump wins the election, it's getting more and more likely that Mr. Trump is seen, or at least he's seen as the favorite as we stand right now. We've seen a strong rotation in factors over the last few weeks. We've seen small caps outperform technology by some of the largest margin in a few decades. So we've seen some of that kind of volatility. So we should see some more. But the returns this year are very interesting for sure. Price of oil up 16% on the year, gold close to 20% as well, although the week-to-date returns that you see in this table here have mostly been wiped out this morning before market open as I'm recording this. Equities are not trading, but gold is trading, and we're closer to 2,400 as I am recording this. So a good vintage so far in 2024 in equities, bonds going more sideways, but at least we're not so much in negative territory as we stand right now. So next week, Bank of Canada, the second consecutive rate cut, we think that is going to be the case. Inflation reports were conclusive. Remember when we had the last decision of the bank on June 5th, I mentioned that there was 2 more inflation reports coming before the next decision. First one was a bit worrying as inflation ticked up a little bit higher, but the latest one for the month of June showed some more progress downwards. So it's all systems go on our end. And on the right, you have what's priced into the markets right now. So as you can see, by next week, for the meeting on July 24th, 96% odds are priced in that will be at 4.5%. So that's going to be one cut. So a market is fully pricing in a cut. And after that, in September, there's another cut that's priced in, 64% odds that will be at 4.25% in September. And after that, if you go all the way to the December meeting, you see that, between 5 cuts all the way to 3 cuts, this is where the distribution is. 4 cuts precisely is 43%, but we do think that by the end of the year, we'll be very close or at 4% on the leading rate in Canada. So what we would expect more precisely here, but it's just our opinion, next week the bank should be cutting, and we would not be surprised if they kind of use the language that suggested that they would take a pause in September, just to give some time for the market to digest those rate cuts and to see a few more macro data coming in, and then after that maybe continue to move with cuts in October and December. But the language that's going to be used by the Bank of Canada next week is going to be very interesting to have an idea of how the path will unfold. So whatever the path is, we think we're going to be closing the year close to 4%, closing 2025 close to 3%, but the language used by the bank will be pretty important in shaping our view here. So turning to the US presidential election. So lots of things here. I'll try to keep it simple and short here. So two charts here. On the left, you have the polls. And the polls are showing that Mr. Trump is ahead of Mr. Biden by about 3%. So this is what we have, the latest polls here. Some new polls are coming out every day, and I was reading this morning that some polls by the Washington Post were suggesting that Mr. Trump is leading Mr. Biden by 1.9%. And if you ask people, well, Trump versus Kamala Harris, so the current vice president, you get plus 1.5% for Trump. So Trump seems to be leading against both candidates. And now, on the right, when you look at what markets are thinking about this, so predicted is those are odds, betting odds for the candidates. As you can see, Mr. Trump is way ahead at 62%, and the odds of Mr. Biden just crashed recently since the debate and since the statements that if he had some health issues, and now the pressure coming from influential members of the party. So more on that on the next slide. I've been mounting. Now Kamala Harris seems to have even better odds than Mr. Biden according to the predicted framework here. So are we going to see a switch between Mr. Biden and Mrs. Harris? So we are expecting Mr. Biden to drop out, so it's not confirmed yet. But, we're seeing some very important pressure coming in. So as you can see on the left here, Mrs. Pelosi was pretty vocal about Mr. Biden needing to drop to avoid a Republican sweep. We've heard yesterday that Mr. Obama added his voice to that, but it was more private talks, and it has not been confirmed yet as I am recording this on Friday morning. So a very important caveat here, but it tells you that it's a very convincing movement that is taking place here, and we would be surprised if Mr. Biden had not dropped by Monday, but maybe we can be surprised here. Mrs. Harris, the current vice president, would not be automatically the candidate, because it's more if the acting president, resigns or dies while he's in function, that the vice president automatically takes the place. But here it would have to go to a vote at the next Democratic National Convention, which takes place between August 19 to August 22. So this is when the vote would take place. There's even an initiative now that could put this vote on in electronic form, and it could be earlier in August. So there's going to be a vote there. But on the right, again, if you look at predicted, so who's favored as being the candidate, so Mrs. Harris has about 60% odds, Mr. Biden's at 20%, and you see other names like Michelle Obama and Hillary Clinton here. So could be a surprise coming from the left field. But what does all of this mean? Well, right now, Trump is ahead. It seems to be difficult to see a scenario where the Democratic candidate just claws back those losses and ends up winning the race as we're standing now. But there's close to 4 months left before the election, so anything can happen. So what does it all mean for your portfolio? So we will be writing about this again for the next monthly that will be coming out in early August, but maybe I can take you to the one that we wrote in April, where we're starting to think about what the Trump 2.0 presidency would mean. So there are many axes here. here. Trade tariffs will be very present if Mr. Trump comes in. At least we're listening to all of the speeches during the Republican National Conference this week. Mr. Navarro, the new, the VP candidate, J.D. Vance, was also very vocal about, trade organizations, other countries stealing U.S. jobs. So trade tariffs will be a very big thing, so that should be positive for small caps. We've seen some of that move already this week, but maybe it's too early. If you want to go into small caps, maybe I would advocate that you wait for a better entry point, but they didn't move this week. Trade tariffs are negative for growth, positive for inflation, meaning stronger inflation. So interest rates should remain higher, so long bonds should remain long interest rates should remain high, so it's negative for bonds, negative for equities generally. So there's a lot here, so you can take a look at this table for sure, but expect some volatility as we move forward based on what is said, what is not said, and expect this election to move the world into a more complicated state where collaboration between countries will be less and the trust in institutions will be lessened. So all of this, of course, might be pro some sectors, pro some asset classes, might be quite negative for others. So there's a lot of things to sort out here. So take a look here, and we'll be coming out with more on these views over the next few weeks and in the next monthly. So what we'll be watching next week, the Bank of Canada rate decision, 25 basis points cuts is what we expect. United States, S&P Global Manufacturing Services and Composite PMIs, new home sales, and core PC price index, very important data point. This is what the Fed looks at when it looks at inflation. A bit higher on the month, 0.2%, sideways 2.6% year over year. So we're not expecting a rate cut by the Fed at a decision on July 31st, but we are expecting them to acknowledge that and maybe start setting the table for a rate cut that could be coming a bit earlier than we expected. So maybe at the end of the year, maybe a little bit before at the end of the year. So this is what the market pricing also is tilting towards. So very important data point next week. And after that, we'll have the Fed decision. So 2 important weeks coming up here in the US. So that wraps it up for the week. Always a pleasure to serve you. If you like the content, please share. Of course, make sure you come back again next week.